gentlemen, I'm going to break down how I'm outperforming the S&P by 33% in my six-figure portfolio. I'm going to tell you how you should handle dividend cuts, and we're going to look at each individual stock I hold and how it's handling its current dividend in this market crash. So ladies and gentlemen, let's jump right into this.
Drop it.
Welcome back, my passive income investors. I like it if you've been in the dividend community for a while. There's one thing you've heard a lot lately, and that is dividend cuts. Even my favorite YouTubers out there like PPC are starting to experience dividend cuts. And it's made me extremely grateful as I compare my portfolio to many in the communities, as I have not experienced a single dividend cut, and it kind of reassures me that sometimes less can be more. And I want to share with you how robust my portfolio has really been through this entire market crash. Now, I am not a financial advisor. I'm not telling you to go and buy the stocks I hold. I'm just showing you what has worked for me, and that does not mean it is going to work in the future. But in the very moment of me looking at my portfolio, this is what it looks like, ladies and gentlemen. Taking a look at all my accounts individually, with the orange line representing essentially the first account I ever started. We got the blue line, which is my tax-advantaged account, and then the black line, which is my registered retirement savings plan, which luckily has actually doubled in less than a year, thanks to my non-dividend paying stocks. But overall, against this little blue line we see here, guys, which essentially represents the S&P 500, I'm actually outperforming by roughly 30+%, which is pretty insane to say, considering I've seen a lot of declines in some of my stocks. But it reminds me that the diversification I have seems to be appropriate for what I'm trying to achieve. Now, currently my combined totals on the year are actually still in the green, which is something else that is still kind of blowing my mind a little bit, with my Scotiabank account being worth roughly $136,500 of this very moment. That includes the 2,000 line of credit I already threw in there. And if we go over into my RBC account, it's currently worth $5,088, so just below that 140K mark. Now, when I set these portfolios up, I always kept the back in mind that I want companies that have survived crashes in the past. I want really robust, strong companies. And yes, I am getting dinged really hard on financials and real estate, but properly diversifying into good growth, solid tech companies, like Microsoft, Apple, Facebook. I think those are the companies that are literally sustaining my portfolio moving forward. But let's more specifically talk about those dividend stocks, and let's see what has actually happened with all of my dividend holdings and what they've done since this crash. Starting with Microsoft here, guys, which has actually increased the dividend over a couple quarters ago, which isn't really in relation to this crash, whereas Apple has actually increased it during this crash, which is pretty crazy to say, because those are some of my largest holdings, and it's neat to see that the prices are starting to hit all-time highs, and so are the dividend yields. Now, taking a look at my utilities, which are some of my favorite stabilizers, we're talking about Southern Company, which just increased the dividend in the crash. Talking about Northland Power here as not increasing the dividend, but still paying it month over month, ladies and gentlemen. Now, let's look at the more at-risk part of my portfolio, talking about things like GEO Group here. Now, GEO Group has always had a volatile dividend, but even with the volatility in the dividend, it's always been high. And even during this market crash, I would have foreseen some kind of a dividend, cut, but it's still paying out the exact same dividend yield. And same with my other favorite REIT, which is RioCan here, guys. Taking a look, it's still paying out the same monthly yield. Now, where things get really interesting is on my financials, because the banks have actually been increasing the dividends in this crash, which doesn't make any sense, because it's not like they're making any more money. Can they be making more money? I guess we'll find out on the financial statements, but with, debt at all-time lows, credit's just been in the toilet. A lot of fear around real estate right now. So same with oil, the loans that these banks give out. And yet again here, guys, BNS, a company that had no problem surviving the '08 crisis, just increased its dividends. Sorry, Canadian Imperial Bank, not Bank of Nova Scotia. Taking a look at Bank of Nova Scotia, though, guys, we're still paying out a very healthy dividend that the last time it increased was in 2019. Keeping all of that in mind, there's still some risk going forward with these guys, but as it stands today, unbelievable performance on the cash flow side of my stock portfolio. Now, finalizing my other bank here, Wells Fargo, where I thought there'd be a lot more risk, considering the last dividend it paid out was an 8.1% yield, but still, the dividend is, still sitting at all-time high dividend yield here, guys. Taking a look with Altria Group, my sin stocks, Altria Group actually increased the dividend in 2019, and it still managed to pay out that last quarterly payment. And then finally, my other sin stock, talking about British American Tobacco, which only increased the dividend 2 payments ago. So in light of all of that information, not to brag, but honestly, I feel like if I held this portfolio up against anything a bank advisor would have done, anything, any basic investment institution would have done, do you think they could have the performance that I'm having here, being a kid in his parents' basement here, managing with no real intellect, no professional education, outperforming some of the best investment managers out there. Now, I love saying that because it makes me feel very cocky, and it makes me feel like I don't know if I'm doing something right. I don't know if it's just the way, my circumstances have led me to set up this portfolio. But either way, it is a shining piece of information I would love to print off and kind of frame and put on a wall and say, look, unless you can compete with what I'm doing here, I'm not going to be giving you any money. So it's really neat, and I'm hoping sharing with you shine some light that yes, anybody can achieve this kind of performance and return even in the worst of times. And again, that only holds true in this very moment. Things could change tomorrow, especially now that I've been leveraging debt and kind of moving that money around. I don't know. I think I'm poising myself for some more upside here, but you guys are going to have to stick around to find out how all of this unfolds. Before I finish up, if I can give you a little bit of advice around your holdings and in case you experience a dividend cut and what you should do, you have to ask yourself, why are you holding those positions? The stocks that I just showed you are for one reason only: average monthly income that I can tap into whenever I need it. And that is why it is there. And if it cannot serve that purpose to me, let's use Disney as an example. If I was holding Disney for the dividends and it cut its dividend, guys, and I was holding it to utilize that income, I would liquidate it. I wouldn't even question it. It no longer serves the purpose it had for me. Now, on the other side of it, guys, you might be looking at something like a Disney and see it as a value play, because I think it's undervalued here, and it might be a good turnaround play similar to RioCan or some of the financials that we're looking at right now. In that light, yes, I think you might want to buy it, but that is going beyond the dividend. If for any reason any of these companies I hold no longer seem fit to have long-term sustainable dividends, even if they cut those dividends slightly, so long as they don't completely cut them and there's still a nice long-term outlook, there's no reason for me to sell it. They still serve their purpose. But that is kind of how I view this portfolio. And again, I'm glad to get some proper diversification again, guys, because if it wasn't for those tech and some of those more speculative plays, my portfolio would be looking a lot different right now. But as always, let me know what you think in that comment section below. Stay cool, stay awesome, and I look forward to catching up with you tomorrow.